Welcome to TradeTheMBI.com. This is John. This report is for the 26th update central of coronavirus or COVID-19 or whatever other names you want to give it. A lot of drama here in Florence as panic. Nothing real practical has happened. And of course, interesting story. The individual who was one of the first cases here in Florence just happens to have a son that goes to Grace and Isabella's school, whom they are friends with, and have had close proximity, meaning they have been exposed to it. So what are the probabilities and odds of that? Probably pretty astronomical, but there you have it. So didn't take long, but I've already been exposed to the coronavirus, and that's okay because we were right on top of how this would break down and with the panic and that there wouldn't be a lot of room in the exits, and boom. I'm still short from that earlier setup way back over here, and just continues to accumulate. And like I said, this is what we look for, these beautiful opportunities when they present themselves as great chances to really just like massively increase returns in high-risk situations, because we're not feeling the risk given what we were seeing from our setups. We knew that this was still going to go down, even though there would be pops in between, and that's exactly what's taking place, because we already, well, gosh, for weeks we've been talking about the potential of what was going to happen supply disruption-wise in that, and while everyone else really, I don't know what they were thinking really, to be honest with you. It just seemed kind of obvious, but you know, that's the difference between knowing your statistics and probabilities. I don't know how to calculate the odds of the only individual who has the virus being directly connected to my kids, but hey, that's not relevant to what the algos were able to tell us, which were very clear that this was just not going well and not improving with that dip below the red line. We knew that selling was going to continue, and it has. So there you have it. We're below the 50%, so that becomes the next benchmark. We're at 38 for the NASDAQ. We knew the NASDAQ had much more room to go because it had to fill positive extremes all the way back here to the 84 range. So keep that one in mind. Looking forward, the euro still trying to rally. I don't know why. I mean, they're just throwing money at it. The central banks are desperate to keep this one going. And the U.S. Fed is going to do it too, because it keeps the economy, at least. The same thing happened during the financial crisis, where the U.S. Fed was propping up the euro just to improve trade aspects. And given that they're going to have any trade with China, it's definitely an impact. And that's certainly also going to be moving Europeans towards U.S. products. So it's one thing. Oil right back down to the lows, and this is going to be the problem. Global drop down, and this is going to have ripple effects like I've talked about within the U.S. economy, because there's a threshold at which deflationary pressure for oil pushes through and actually hurts jobs in the Midwest and, well, every oil producing area, in the north as well, in the Dakotas and that. So we'll see how that begins to play out. It won't be immediate, but probably within the next couple of months. And of course, gold takes a little bit, because when you have that kind of selling, people usually have to liquidate other positions, and that often puts pressure on the commodity. Plus, we have positive extremes that get filled back, going all the way back down to here, the 150 range, which is 1500. It's a huge, just massive day. So we had that big run up. It was like, okay, then it was like just a matter of waiting for good sell signals. The first DLC spread that came had the full reset of the steel. Second one, not so much. And boom, that one clicked right about there. Still popped up just a little bit. All fine, because boom, it filled it all right back in. And then little pops, and every little pop was just an opportunity to continue to add in to the setups. And every little, no steel reset through any of this portion right here, and that led to all these drops. So even when you did have good buy signals, which a couple of these were decent, and they still produced pretty decent numbers from an upside standpoint. But you can see that as we started breaking through these previous algo levels that I've left on here, that the next ones became both the support point, and when they broke below, they were resistance. And those programs just turned right on, and then every time I got near them, they were just selling into that bounce going through. And that just continued. I just stopped marking because it was just like I wasn't going to change from being short. So to me, it was irrelevant. This was pretty straightforward, just going to be all the way down. And in fact, it was. So look at this. I mean, this is just a massive amount of volume on a day. I'm just scrolling across there. And here we are right now, and it's just going to be kind of mixed. We're probably going to get a soft period where we kind of float back and forth, but with the added volatility, obviously, it's going to be so important to utilize your Morganacci lines because it really gives a clear delineation of what the risk ranges are in that, so that you can appropriately manage that, because obviously when there's greater volatility, there's greater risk. So you have to expand stops, because if you try and keep the same ones when there's low volatility, you're just going to get whipsawed around. Fortunately, not so much with where we've been going, because the indicators have been pretty clean with a lot of this. Even when this DOC spread came, it was a beautiful one. Literally from the beginning, if you took it even early on within this range, and I love getting somewhere in between that 100% and 76%, and then 3150 range, and then you dropped all the way down to 3130s before the bounce back, because you did have the steel reset at this particular point, and that gave enough for a little bit of a rally. Of course, wouldn't have liked it until we had the orange dip off that move, but we did solid improvement from a shakeout standpoint. It wasn't anywhere below the negative 13 line and moving. So from that standpoint, there's still some people buying into the setup. And the real question is just going to become the panic. We've seen an outcropping of cases in America, and that the irony here is, again, it's just the panic because there's only a couple of cases, and you're talking, even in a country like Italy here, you've got 60 to 80 million people in the country, and you're talking about, 100 or so, 200 cases. It's just not statistically that significant, but yet it's significant when it happens. And of course, obviously, us being exposed, you're like, okay, but look, even if you're in a room of 10 people, the number of people that potentially can get infected may be 1 in 2, and even if they are exposed, it doesn't necessarily mean they're going to spread it further. But these were the questions we already had about what was coming out of China and their failure to report accurately what the R0 was, and it was a real problem because Italy waited too long to institute their ban from China. The U.S. obviously was the earliest, and that was the smartest move, because they're really not going to try and stop the virus. It's not really the key. The key is slowing it enough so that your health services can take care of the number of people that are going to end up with chronic conditions, which is a very small percentage within that, but it's with a large enough population infected, it still would overwhelm health services in anywhere in every country. So that's the biggest concern with it, is that even with a small 7 or 9% of the people needing to go to the hospital, that's millions of cases. So if you can slow the rate of spread, you're going to improve your ability to take care of people. And, but again, it's the panic shortages that are going to take place, where people buy up everything. It's going to boost earnings for companies in the short term, under certain aspects, but have probably a little more prolonged negative impact going forward. And so if the market is looking at 6 to 9 months in advance, they're going to start to have to register the fact that that's going to have a significant impact. It's a ripple effect that will either be cut off, or it will just exacerbate itself. And a lot of this is going to depend on some of the government responses and how they react to it. And throwing money at it may not necessarily be the panacea to save everything. So we'll just follow our algos and go from there. It's all good from our standpoint. So as always, though, trade well, and I will certainly put up charts. It's been quite crazy here, so little deference to the fact that things are a little wild given the current developments, but we're hanging in there. So we'll talk again later, and I'll certainly put up anything on the Skype chat that's relevant.